At the end of March, at the end of the reporting period, we're going to prepare the reports. And the first report is the cash flow statement. And to get the information that goes into the cash flow statement, the best place to look, of course, is the cash receipts journal and the cash payments journal. So we put the positives first. So we have $5,500 worth of sales came in, and there was $550 of GST on those sales. So they're the positives in the cash flow statement. 5,500, that's the sales, and the GST on those sales, 550 GST collections. Notice that I did not include cost of sales as a cash receipt, even though it's in the cash receipts journal. That column there is not a cash inflow. It's only there so that we can use the information later on when we prepare the income statement. So we've done the two positive cash inflows, sales and the GST on those sales. Now we do the cash payments, which are stock purchases, office expenses, and the GST on those payments. So we go back to the cash flow statement and we write stock purchases, $1,800 in brackets because it's a negative, office expenses, $1,500 negative, and the GST payments, $330 negative. So the net from operating activities, $2,420. There's no other cash flows at all in this particular business. So the total cash flows is $2,420 as well. We add the cash at the start, which is given in the original balance sheet, and we work out the cash at end at $17,420. It's a positive figure, so of course it'll end up in the balance sheet there as a current asset, bank 7420. Let's have a look at the income statement. The presentation of the income statement is different when we prepare the statement for a trading business. We start off the same, revenue, but we write sales now instead of, say, takings or fees or something like that. So sales is always the name of the revenue activity in a trading business. And that 5,500, that represents the sales which we've reported in the cash flow statement, that 5,500 there, or you could get it up from the journal there, sales 5,500. So these are cash sales, 5,500. The next subheading is unique to a trading business, less the cost of the goods sold. Goods is just another word for stock. Less the cost of the stock that's been sold. So we count the cost of sales, the cost of the goods sold when they are sold. So this cost of sales figure here, $2,200, is the cost price of the stock that was sold during March. To get that figure, we can get it from two places. We can go up to the cash receipts journal, and there it is, that cost of sales column, 2,200. That's why it's there. So when we do the income statement, we have the figure readily available. Cost of sales, 2,200. There it is, 2,200. Or there's another way to get it. If we go way up to the stock cards and we add $600, that was the first sale, to the second sale, $1,600, we get $2,200 as well. That third one is not a sale, that's drawings of stock. So there was only two sales. $600 was the cost of sales for the first one, $1,600 for the second one, so $2,200 is the total cost of sales. That figure is also available there, and of course it goes into the income statement there. Cost of sales is the major expense of a trading business. That's why it gets its own heading, the cost of goods sold. Cost of sales is the most significant expense for a trading business. It has its own heading. Cost of sales is $2,200, and we come up with this new concept called gross profit, $3,300. Gross profit is the difference between sales and the cost of the sales. Gross profit. Sales less cost of sales equals gross profit. This term gross profit only exists in a trading business. And then you take away the other expenses, which in this case was office expenses, $1,500, to determine the final profit, which is called net profit, $1,800 in this particular case. So the presentation of the income statement in a trading business is different. Sales, not fees, not takings, less cost of goods sold. And then you list the major expense, which is cost of sales, $2,200, to determine the gross profit, $3,300. You take away any other expenses. In this case, there's only one. Office expenses, $1,500, to get the net profit of $1,800. So the presentation is slightly different in a trading business. You have to remember that presentation.